All right, hello everyone. Today we're going to talk about Bitcoin. Where is it going? How can we have a better idea? Well, I'm going to show you. It is actually not very hard to use charts to get a good understanding of where Bitcoin is going to go. In fact, if you're interested and want to learn more how to have better entries, better exits, better stop losses, better risk management, all over trading is something that you can get good at. It just takes some work. I really love teaching how to do this for people. So if you're interested, I do have a Discord. You can come to the DeFi Dojo and click on my link, and in my description in this video, there's going to be links to the Discord, to my Launchpass page. You can try it for 2 weeks free, but enough about that. I'm only going to show myself for a couple minutes, but I do want to teach you. So let's get into Bitcoin. Bitcoin, where's it going? Well, a few weeks ago, I mentioned that 25,200 was our resistance, and you can see we definitely had trouble getting over it. That's where we took profits in the Discord many weeks ago, and now we have blasted right through it. And if you were paying attention to my Twitter feed, I posted this chart not long ago, and I said if we get through 25,200, we are going to go straight to 28,800. That's the next level. 27.3 is kind of like the halfway point, and we're kind of oscillating around that right now. But there's several reasons why technical analysis is showing me 28,800. Not only is it the top of this gap in the volume chart, but it also helps us along the way with what's called a Wyckoff distribution. And here we're looking at USDT dominance. Okay. Now, if you're not familiar with Wyckoff, I really think it's a good thing to learn. And if you wanted to learn about it, you can just do a simple Google search. But I'm going to kind of show you a little bit about it today. Wyckoff distribution is how people exit a market. And it's not really like it's a planned thing. It's not something that like market makers do. It's not manipulation. This is just normal human behavior. And this has been going on for almost 100 years. A guy named Richard Wyckoff actually discovered this all the way back in like the 1930s. So it's really no different today. Trading back then is no different than it is today. Human behavior is exactly the same. And this is what I try to teach. I try to teach people that when they look at a market, when they look at any ticker, whether it's a stock or a crypto, you want to look at the behavior of the market. You don't want to look at the price. The price has nothing to do with what you're trying to do. Okay? What matters is the behavior. So the behavior here is a distribution. And what that means is people are exiting this particular market over a period of time. And there's a pattern. Now, it's not always exactly the same, but it's going to look something like this. And it has phases. It has this phases A through phase E. And when you start to notice this, and you get to this point here, and you start coming down and you making these lower lows, and you see that you have a confirmed area of support and a confirmed area of resistance in a particular range. And as we can see here with USDT dominance, we have this resistance, and it's right up here at the 1.618, which is a Fib ratio retracement or extension that, we've been watching for months in the Discord. And I pretty much called this being the top many months ago. And it was one of the main reasons why I tweeted out all the way back in, early December that this is when you want to start buying Bitcoin. And we were in, the 15 to 16K levels. Could we have made lower lows? Sure, but it wasn't going to be anything substantial. And that was when we started accumulating Bitcoin and other altcoins. And we're up substantially now on our spot trades. We also leverage trade. We do short-term trades, swing trades. It's really great. The guys in there are just killing it right now. I've taught them, and they're just taking the information and running. But this is the phases, and we're getting close to phase E now for USDT dominance. And for those of you who don't know, this is the stablecoin dominance. As this chart goes down, crypto rises. As this chart goes up, crypto falls. So we can chart this just like anything else. And it's actually very useful because it helps us understand the entire market as a whole, rather than just focusing on Bitcoin or just focusing on the NASDAQ. For those of you that don't know, also the NASDAQ has been correlated with crypto. And the main reason is because most of the growth assets and growth stock companies are in the NASDAQ. The S&P is kind of the top 500. The NASDAQ is where up and coming growth companies are. And since Bitcoin is a growth type asset, it follows NASDAQ a little bit more than it does the S&P or the Dow Jones. So we follow the NASDAQ to kind of sort of get an idea of where maybe coin and another crypto might be going as well. If you notice over the last couple of weeks, the NASDAQ has outperformed the S&P 500 quite substantially, actually. And that just helps us understand that, it's time for crypto to have its moment, right? While we can kind of lay off the stock market and focus more on crypto. And if things start turning, we notice that. And then we can start paying more attention to stocks than we do crypto. And not just any stocks. We know which sectors, we know which stocks to look for, because we can kind of analyze the market in this way. Now, if we look at Bitcoin, it's in the opposite. It's in what's called an accumulation phase. And we could be getting close to phase E here. Now, there are multiple phases of this. So here you can see, if we look at an accumulation chart instead of a distribution chart, it looks similar to an accumulation chart, to a distribution chart. It's just flipped upside down. It's just the opposite of what's going on. Accumulations are typically very long, and distributions are usually a little bit shorter. So we might have a little more time on this, but ultimately, if you analyze this and compare it to this, you can see how these phases kind of line up and match, and you can take screenshots of this and compare the two if you'd like. That's what I want you to do. I want you to learn this. I don't try to feed people fish. I try to teach them how to fish. I don't want to give you alerts. I want to show you how to create your own trades and to create your own risk management. That's my main goal as a teacher. And in the DeFi dojo over here, that's what we do. So I hope to see you there soon. All right, so now if we just take this, you can see this volume gap. And so I really have a lot of confidence that Bitcoin is going to hit 28,800 at some point in the near future. From there, it's another story, right? So how do we figure that out? Well, let's just go to our basic Bitcoin chart and just look at the previous cycles. All right, you can see we have a downtrend that gets broken at some point in time. And then after that downtrend is broken, we get a move up and we get into the next bull market. After this downtrend is broken, we get another bull market. After this downtrend is broken, let me get my lines, we get another bull market. And then here we are today, where we can draw this downtrend and we can clearly see that it's broken, right? And we're in the early stages of it. So there's still plenty of time. There's no reason to go FOMO and just buy all the Bitcoin you can. This is just when you want to average in. The best time to average in dollar cost average is when you see the RSI is oversold, right? And we're on a weekly chart. So obviously we've missed that opportunity a long time ago. This was back in June of 2022. And you can see, even though it was oversold in this area, it did make a lower low following it. But this is where it allowed me to see the divergence, because this is pointed up while this is pointed down, right? And this tells us that strength is returning to the market, even though the price is falling lower, right? And this is where things, this is where you get the bottoms. This is where bottoms happen. Now you can see the same thing happening at the tops too. If I zoom in here, the same things happen at the tops. We can look at this and say, okay, well, the price got higher from here to here, but the RSI got significantly lower from the same 2 points, right? That's bearish divergence. This told me in January last, not long ago, but January of 2022, 2021, whatever it was. Yeah, 21, 22. That's when I got out of the market. And then you can clearly see that we started heading down from there. And now we get the opposite effect, where we get pointed down on the price action and a pointed up on the RSI. These are very, very significant on weekly time frames. You start moving into lower time frames, it's less significant. They can fake you out, and it's why high time frames are always key. So let's go into some fibs, shall we? If I take my fibs from this bottom and just measure up to this top, you can clearly see that where we found support was at our 0.5. This is significant. This is a significant support. So in my opinion, I think we've bottomed. If we haven't particularly bottomed yet, then we might get another situation where in this bull cycle here, in this bear cycle, we had like a double bottom, right? So it came down here and then made a same low, and then went into the bull market. So that is sort of still possible. However, our weekly EMAs are still showing me that we are heading back up. And you can see that they are both pointed back up now. These EMAs here, the 821. So I'm pretty confident that the bottom is in. However, that doesn't mean we're going straight into another bull market. All right. And I'm going to show you how to use your fibs to determine where we're going in this rally, and then where we might retrace to, and then when the actual bull market starts. And it's most likely not going to be until like 2024, maybe early 25. So let's measure and show how the pattern happens. The pattern is very simple. If you can measure any bear market from top to its bear market low with a Fib retracement tool, and that's all I'm doing, you can see clearly that we go and rally to the golden pocket before we dip back down. All right, and I'm going to go back to the daily now just to show you this in a little more detail. But here you can clearly see, and this has been going on since I can measure the Dow Jones from the Great Depression in 1930 and show you this exact same pattern. This is no different. This is exactly the same. Our behavior has not changed. We are still the same human beings with the same emotions, with the same fear and the same greed. Nothing is different. It's just a different asset, and it's a new asset class. It's exactly the same patterns that happen every single time. We come down, we find our bottom. Once we have a bottom, we can measure it. When do you measure it? You measure it when the downtrend is broken. Okay, downtrend breaks. Now we can measure, right? And that's like here. You know, you can measure this quite early on before you actually get to where the golden pocket is here in the 618 to 71 area to have a good idea of where you're going to sell. So we're just going to buy, and we're going to take our profits up here, and then it's going to sell off. And this doesn't look like a big sell off, but it actually really is. This ended up being from the high at the 786 to the low. It ended up being 40% drop, right? So if you're lucky enough to get in down in these areas, you want to take your profits up here and try to rebuy 40% lower, if not more, because typically we do come down more. So we then find support in the golden pocket again, and then we get our new bull market. As soon as we get above the 886, the bull market starts, right? And then people are like, I don't know where to sell. Where do I sell? Well, because, you know, we've never been here before. We've never made these highs. Where do you sell? Where do you take your profits, right? Well, you want to take your profits at the 1.618, and you want to take your profits at the 2.272. Those are going to be your tops. I say the 1.618 because the very recent cycle did not get past it. Every previous bull market has gone all the way to the 2.272. And not just like kind of, it just nails it every time. And then we start a bear market. You can measure this yourself if you don't believe me. So now, I'll measure this one to show you the same exact pattern. So we'll measure this bear market. So from the top to our bottom, up into the golden pocket, you want to take profits. And then we dip back down substantially. And then we find our support back in the golden pocket. Once you see this support for the second time in the golden pocket, this is your signal. This is when it's time to go. Okay. And then you can see we go into a massive bull run. Where do you take your profits? The 1.618. We didn't get to the 2.272 this time. The previous 3 cycles did. This is the first cycle that did not. So that's why I say you want to take your profits at the 1.618. If you take your profits there and we dip and you see us come back up over again, well, it's a very simple trade at this point. You're going to enter on the break of the 1.618 when you see candles close, and you're going to keep your stop loss just below, right? And if you're wrong, if it doesn't keep going, then you're going to stop out right away and your risk is very small, right? We're going to stop out on that candle right there. We entered here for days, right? And as soon as it breaks below here, we're just getting out of the market and we're going to wait. And you can see we would have gotten out of the market at the very top we would have not been trying to risk buying all of these dip after dip after dip after dip. You know, you're out of money by the time you buy all these dips. Buying the dip is not a strategy. Okay, you want to wait for it to turn around. You want to wait for the support. You can see no matter where you draw fibs, this bottom's hitting something. This bottom is hitting a fib line no matter where you start and stop these fibs. So it's very accurate, it's very useful, and it's very resourceful. If you don't know how to do this, I can teach you. I do one-on-one sessions. So the Linktree link's going to be in the Discord, in the description here. So feel free to click on that and, you know, just check it out. It's a lot of education that I'm offering. So let's clear this. And so now we're worried about the current market, right? What's the current market going to do? Well, we can take our downtrend, just like we do with all previous cycles, and see that we broke it. And not only did we break it, we kind of made a move up, and then we came down and retested it right there, okay? Very clearly, it's a very perfect retest. That is exactly where you wanted to buy that, right there on that line, all right? But let's say we missed it. What do we do now? Well, now I'm FOMOing. Now I don't know. Should I buy now? Should I wait? Okay, it depends on your time horizon. If you're willing to hold on to Bitcoin for 2 years, sure, go ahead and buy it. You'll make money. It might not be right away, but again, we're waiting 2 years. Now, if you're a short-term trader, I can teach you how to do that too. That's a little more complicated. It's a little more complex. You got to have a lot more discipline. You have to have serious risk management, and it's not for everyone. So keep that in mind. But we can go ahead and draw our downtrend just like we did with the previous markets. Start at the top, draw to the bottom. All right, well, we're trying to clear 27.3. This was one of the main reasons I said 27.3 was the halfway point in between our volume gap, right? So that's 27.3, and you can see that's right where we are. So I have multiple things pointing at all these price points. It's not just my volume profile. It's not just my fibs. It's not just the 821 EMAs. It's not just the standard moving averages, where we just now got through the 200 MA on the weekly. It's multiple things showing me these same levels. And if you can learn how to draw and do all these things, and you start seeing this repetitive number on all of your indicators and all of your tools, you can have a high degree of confidence that that price is going to hit, and it's going to hit and it's going to find resistance, or it's going to hit and it's going to find support. And this allows you to find precise entries, precise exits with precise stop losses, right? And this is where you get your good risk to reward ratios. If you're going to enter right on that support, you keep your stop loss just underneath it. You can only lose a couple percent at the most. You can even leverage pretty high and not lose that much if you get stopped out of the trade. But if you're right, if it does find support there and move back the other way, well, you're going to make a lot of money and you're going to be risking very little. This helps you take the emotion out of trading. You don't have to worry about, I don't know where it's going. I don't know what to do. You're going to know what to do. You're going to know where the levels are. You're going to know where things are going to turn around and change direction. It's very, very useful. And I really love teaching this stuff. So I'm sorry if I'm passionate. But where are we heading to next? Well, if we can break that 28.8 on the volume profile chart, well, then our next level is going to be the 0.5 here, which is at 32.5, right? And we also have another chart that can help us, and that's the CME chart. The CME chart opens on Monday, it closes on Friday, and then over the weekend, the price is still moving, right? Well, when Monday comes again and the price is in a different location than where it closed on Friday, it leaves gaps in the chart. These gaps like to fill. So these end up becoming targets during the week. So I just wanted to kind of show you what I'm seeing with Bitcoin, what I think. I do not think you should be shorting this at all anymore, right? This is not a shorting market. It hasn't been a shortable market since it made this big move down here and showed us that it reversed an entire level back. All these previous moves were just kind of bear flags with simple retracements and then another fall and then another fall. And this one has shown that it's gotten itself back up into a level, and now everything underneath here is now an invalidation. This means like this is where most people decided like, okay, that's it, we've had enough. The bears kind of stopped selling and the bulls started taking over. And so now we're just seeing this transition. So it's going to be rocky. It's not going to be a straight line up. However, what's going to happen is the same thing that happens in every single cycle, right? We're going to make a move after breaking the downtrend, and my path that I'm about to create is not going to be accurate. I'm just going to do like my best guess on what I think we're going to see, but I think we'll probably come back down, make a little choppiness around this 27.3 mark, finally get up to the 28.8 mark, right? And find resistance where we could find another move back down, right? And make a lower low in this zone. We could even get down as far as the 22,000 level again, but wherever it does find support, it will make another move up, hit the 0.5, come back down, and then eventually it'll make its way up into this golden pocket and bounce around. And we may even get the 786. Some cycles go to the 786 before they retrace. This will be the top. This zone will be our local top before the next big retracement. Then what will happen is the same thing that happens in every cycle. We will get a massive move back down lower, most likely to take out the lows of what was back here, right? And then there's also another gap still down to like 20K, which is the only thing that really concerns me. But this is when you want to start dollar cost averaging back into Bitcoin for the long term, because this is where the lows will be in this zone where we're going to go make new all-time highs. All right, and then we're going to do the same thing. Where are we going? Where do I sell? Where do I take my profits when we're in the bull market? Well, it's going to make its way to the 1.618. At least every single cycle before has gone this far. Now, the first three cycles went to the 2.272. Our last previous cycle, which is here, went to the 1.618. So our trend did get weaker. So there is that question of like, okay, maybe our trend gets weaker again. And if that's the case, then maybe we do only get to the 100K mark. Maybe that's it, right? Maybe that ends it. Who knows? It could be. So I would suggest you take profits here, here, in here if we get there. If we get past the 1.618 and you start seeing us finding support on top of it like this, then you can go ahead and get back in, because then we're most likely going to the 2.272, but not unless you see this first. Okay, so I hope you enjoyed this video, and I'm also creating a trading bot with Astrobit, so I'm pretty excited about that. If you'd like to look into getting into the beta, then just get into the Discord and ask me some questions, and we can try to see. Quite sure how we're going to do the beta yet. It's still kind of new, but the bot is in sort of a testing mode at the moment, and it's doing really well. Its first 2 trades it took were positive, one for 10% and the other one for 23%. So I'm pretty excited about that. All right, well, thank you for watching, and I'll see you in the DeFi Dojo, I hope. See you there. Bye.